Is joining us right now, Lyft co-founder and president John Zimmer. John, it's great to see you. And boy, did this surprise the markets to the upside. Tell us what this quarter suggests to you and represents.
Yeah, we had another strong quarter. We beat on every metric. The recovery is happening in our business. Drivers, there was a lot of talk about the driver side of our business. Active drivers were up 45% year over year. So we're getting better equilibrium on the driver and rider balance in our marketplace. And people are getting back out there.
Speak to, though, this driver issue, because I think it is the big question, which is what kind of incentives do you have to provide to drivers? The price, by the way, on the consumer end, because I just used the service, it's still high. I mean, it is meaningfully higher than where it was, say, 18, 24 months ago.
Yeah, still higher than we'd like from that time period you mentioned, pre-pandemic, but much improved since the previous quarter. And the driver piece of the equation, I think, has been put on this industry. But if you zoom out and look at retail, hospitality, and other industries like that, where we compete for talent, going back to January, our active driver pool is growing 5 times faster than those other industries because of the flexibility. So we're still coming out of a pandemic, and the marketplace has to get to the right service levels. But we're happy with what we're seeing, and we're confident we're going to continue improving service levels.
So, John, one of the conversations we have on this show all the time is about inflation and wage inflation as part of that, both the good and bad of that. Your sense, long term, what equilibrium actually looks like for you? Meaning, how much higher will wages actually be, do you think, for the drivers? What does therefore that mean to the margin over the next, say, 12, 24 months?
Yeah, hard to predict overall inflation. The good news about our market is, if you go back to pre-pandemic, I think unemployment was at all-time lows, maybe 3.5%, and we were growing our pool of drivers at that time. So because of the marketplace dynamics and the supply and demand balance, we are able to operate in many tough environments. We've also added, for the rider side, many differentiated products at different price points. So if you're willing to wait a few extra minutes and allow the marketplace to balance out, you can actually get a more affordable ride than you could prior to the pandemic because of those new features.